Hello guys and welcome back to the channel. So last time we looked at how these reversal patterns and continuation patterns move, and we saw that most of the time mostly they normally touch the reversal patterns one, two, three times most of the time, but they don't normally there are some times which they don't touch the reversal patterns two times. You can see like here it touch first time, second time, third time it reverse its impulse, gave us a continuation, and then this down here the falling wedge it touched one, two, three, and it reversed. But there are sometimes they don't touch the reversal patterns or the continuation three times. There are times which they normally touch one, two, and then they can reverse from a double top, or they'll just impulse above the double top a little. It will come up as it is approaching the double top. It might form a continuation pattern, which you can enter on the continuation pattern with a risk entry or wait for it to impulse back down or up and give you a continuation which you can enter from. Sometimes they also come and impulse from the double top area. They won't reach to the third touch, and then it will impulse back down again or up and then give you a continuation pattern which you can enter through that after that continuation pattern on the break of that continuation pattern. We'll just look at some of the examples on the charts. As we can see, this was a good example. The market moved very nicely. It was forming a bigger pattern, one, two, three on the higher time frame. If you went down to the lower time frame, it was forming a pattern inside a pattern, which had also three touches. One, two, and we were expecting to enter on this third touch, which we did. After the third touch, as it was approaching the third touch, it was forming a rising channel which you could have entered on the break of the channel with a reduced risk entry or with a high risk entry from the top of the channel. This was a perfect example. The market was moving perfectly as we expected. Sometimes the market don't move as we would expect it to move or as we would want it to move. Sometimes it gives us two touches and reverses. We will look at that on the charts also. We look at the US dollar Swiss franc. We had an example where on the higher time frame we were waiting the market to reverse after we saw the market was forming a reversal rising channel which is a reversal pattern, and it had already touched the channel two times, one and two. So if, like for example, in this example, if you were waiting for the market to come and touch the trend line up here the third time in order to reverse, you would have missed this trade. But if you behind your mind kept the idea that you knew that the market could reach to this double top area and then reverses, or it could cross the double top area just a little and then reverse back down and give us a continuation. And this is how we entered this trade. We knew that the market could reverse from this double top area. And if you went down to the lower time frame, you could see that the market reached up here, it slowed down, impulse down. If you go down to the 15 minutes, this was a continuation. The market reached the double top area, impulse down on the 15 minutes, and it formed a continuation pattern right here, which we entered with, and we took the market down with us. After it broke this structure impulsively, we knew that there were high chances that the market could reach to the beginning of the correction down here. And even if you couldn't get the trade from up here after the first impulse and correction, the market still gave you other opportunities to enter this trade. If you were patient enough, you could have got these opportunities. There was one, two, all these were correction. As we said, the market normally moves in two phases. It's normally impulse, corrects, impulse, corrects, impulse. And if you are patient enough, you could, if you missed a trade as the market was reversing, you could use these corrections to enter your trades on the break of these corrections. So we'll look at another example, another pair. We'll look at crude oil, US dollar, crude oil, US dollar against the crude oil. As we can see this pattern, the market was inside a bigger structure and we were expecting, we saw that the market was forming a reversal pattern, which was in form of a rising channel. But as the market was approaching the double top, we saw that the market was moving towards the double top area correctively, and we knew that the market could reverse from that double top, and it did exactly that. It didn't reach to the third touch. It got to the double top area, pierced through the double top area, and it impulsed down. On the 15 minute, if you go to the 15 minutes, you can see that the market moved towards the double top area correctively. For me, normally, according to my trading plan, on these double top areas, I don't enter with risk entries. But if it formed a structure like this, while on the third touch, I could have entered with a risk entry up here. But on this one, I waited for the market to impulse down after the double top, and I entered on the break of this structure right here. My stop loss above the structure, and after the market break the trend line, this structure impulsively after this candle right here, I moved my stops to break even. As you can see, the market reached down to the went down to the beginning of the correction, and if you had taken this trade, you will have made a 6% profit. If you risked 1%, we look at another example at the Canadian dollar, Japanese yen. There was a trade here where also the market didn't reach. On this trade, the market didn't even reach to the double top area, but it reversed as we were expecting. You see, the market gave us the first touch, second touch, and we were expecting the market to go to the third touch and reverse from there. Or we also knew that it could reverse from this double top area here. We knew that it could come here, form a structure as it was coming up, and we could have entered with a risk entry, or we also knew that it could come up, break the double top, reverse back down, and give us a continuation pattern which we would have used to enter the trade with. But for this one, it never got to the double top area, but it reversed. You see, it never got to the double top area. It impulsed down and it formed a bigger correction which we used to enter our trade with. After, if you go down to the 15 minutes time frame, you'll see that I'll go to the 1 hour time frame. The 1 hour time frame, you'll see that the markets never got to the double top area, but it impulsed down and it started forming a bigger correction, which is a continuation pattern, because we say the market moves in impulse, correction, impulse, and correction. It had already given us a first impulse, and we saw that the market was about to reverse back down. Now it was forming a bigger correction, and this one we entered with a risk entry on the break of this correction here. Our stop loss was just above the structure, and after the market broke this trend line impulsively, we knew after the market broke that trend line impulsively, we knew that there were high, the chances were very high that the market could reach down to the beginning of the correction, which was down here. And even if you had not got this first trade here, the market still gave you other opportunities to enter. Its impulse gave you a bigger correction, which we added positions on top of the positions that we had here. We entered here with another risk entry. After that, it still gave you other corrections. Its impulse corrected another entry. You'll have taken another entry from there. And guys, remember, whenever you are adding positions on top of other positions, you should always make sure that your first trade here, you have already removed risk from the trade. It's on break even. So it also gave you another opportunity to enter. And at last, it got to a profit target down here. And it also passed our profit target. It went down, formed another continuation pattern. So guys, that has been our video for today. I just wanted to share that quick tip. I hope you learned something from this video. And please, guys, subscribe, refer other people to these videos. And if you have any question, you can ask them down there on the comment section. Thank you, guys. Please subscribe and like this video. Subscribe to the channel. Thank you.